Okay, welcome back everyone to Lam's Cryptoverse. I'm going to be relaunching this channel as a podcast with my friend Waleed. Please tell me a little about yourself and then we can get started.
Hey guys, my name is Waleed Tahir, and thank you, Dominic, for inviting me to your Lamb's Cryptoverse podcast. I'm a crypto research analyst based in Dubai, working for a centralized exchange that is licensed and regulated from Abu Dhabi. I think that's the brief in which I can go by. And once again, nice to meet you, Dominic.
Nice to talk to you too, and it's my pleasure having you. Well, that's really brief, so I better keep mine brief. I got to compete with you. I have a lot of letters next to my name. I'm one of those people that worked at traditional finance. I worked for two of the largest banks in the world, and right now I'm a crypto degen and tech degen, as you would say. I follow a lot of technology software companies, hardware companies, as well as crypto and Bitcoin. And my background is I have a BS and MBA from Manhattan College, and I have a CFA and FRM. And I'm going to only focus on FRM. I use this a lot. FRM is financial risk management. I think risk management is really, really important in the crypto space. I don't talk about what price or where it's going because there's so much risk. The most important thing is to manage your risk. So today we have a big agenda. You can see right here. We've got a million things to talk about. The overview of the agenda is we're going to talk about what's going on with macroeconomics, what's going on with Bitcoin, what's going on with altcoins and Ethereum, what's going on in the news this week in terms of who's buying whom, who wants to buy whom, and that includes Ripple and Coinbase. And lastly, we're going to be talking about Warren Buffett and Berkshire Hathaway. And you all might be thinking, why am I talking about Warren Buffett and a crypto podcast? Well, you'll see when we get there. So let's get started. The first thing I want to talk about is macroeconomics. There's a lot going on. Trump's having a meeting, I believe today, tomorrow, with China, and that's been the big cause of a lot of problems. And Treasury Secretary Scott Bessent, who seems to be leading everything, is also meeting with China. And then we've got a liquidity update I want to talk to you about. And there's also deregulation I want to talk to you about. So, Waleed, is there anything you want to talk about there before I start showing some charts on M2 money supply? You want to talk about macroeconomics in any way?
No, I think you're good to go. And plus, TradeFi is not much of my background. I'm more for crypto degen. I'm waiting for that part to start rolling. I can start me bringing my opinions and things to surface. But yeah,
we're very
you can have a head start.
Folks, we're very complimentary. I'm a macro top-down guy. I'm like a left-brain guy. And I also do bottom-up, but I always start top-down. So I'm going to talk about macroeconomics. So here's what we got going on. China's lowering their reserve requirements because China's in bad shape because of the US tariffs and also because of the real estate crash. We all know that real estate market crashed in China about a year or two ago. It was like a slow crash and then boom. And then we got the tariffs of like 120%, some craziness like that. So China's increasing liquidity by lowering reserve requirements for banks by 0.5%, which increases liquidity by $139 billion. And so what that does is cause global M2 money supply to rise. So I'm going to show you a chart of that in a moment. The second thing I want to talk to you is about Scott Bessent. He's got this 3-3-3 plan where he wants to lower the credit risk of the United States, lower the budget deficit, and lower the overall debt of this country. Because if we don't, this country is bankrupt. And the third thing I want to talk to you about is this is some bad news. The bad news is that, well, historically, the bad news is that the US government, especially, but the other governments too, have been trying to halt crypto. They're trying to stop it and kill it. There's something called Operation Choke Points. Forgive me for my webcam is going bonkers here because I'm moving my hands. It takes hand signals.
It's going back and forth.
Going back and forth. So I'll try not to move. But usually I'm Italian, so I talk like this, but I'll try to keep my hands locked up. So basically, historically, major governments have been trying to choke crypto, and the US government had something called Operation Choke Point 2.0. Then Trump came and it's been deregulating. There's been a full deregulation process by the Trump administration, the House, and the Senate. Now, this is changing. For the first time since Trump's election, November 2024, there has been some stoppage of deregulation. This happened 2 days ago when there was some Senate bills and House bills, two bills. There's two stablecoin bills and there's some crypto bills. But basically, Maxine Waters, who heads up the Senate Finance Committee, her and six other people, maybe no, 8 other people, walked out of this meeting about stablecoin regulation. So that means that as of today, there's been a stop of deregulation in the United States. So this is really bad news, but I think we're going to move forward in the next few months because there's going to be other crypto deregulation, but that's really bad. So let me show you some charts here because I want to show you I want to talk to you about what's going on with altcoin season and M2 money supply. So let's start here. This here, and let me just move my the video cam. So the problem with altcoin season, if you remember, everyone's been calling for altcoin season. And they said it has to do with the Bitcoin halving. I don't have it in front of me right now, but the theory is that after the Bitcoin halving, altcoins go up parabolically. They go up like crazy. And the theory is that altcoins are attached to Bitcoin. So when Bitcoin goes up because of the halving, there's a wealth effect. So what people do is they sell the Bitcoin because they made so much money in Bitcoin, and then they buy faster horses. They buy altcoins. My theory is that there is no such thing as a Bitcoin and altcoin cycle related to the Bitcoin halving. I think it's all due to liquidity. That's just my opinion. You don't have to believe me. My other opinion is that you're not gonna like me saying this. I think that altcoins trend towards zero, that they go down. They constantly go down. And we've already lost 15,000 altcoins. They've gone to zero or near zero. So my theory is this, I'll make it quick because we have a lot to talk about, is that you do not get altcoin season until M2 money supply increases at a rapid rate. So what you're seeing in this cycle, the alt season cycle, up and down, to me, it's not the Bitcoin halving cycle. What you're looking at is the liquidity cycle. And most of it's from the United States, but it's also from the European Union, the ECB, it's from the UK, it's from Japan, and now it's mostly from the PBOC. It's meaning China. China's aiding liquidity. It's even from the US dollar. When the US dollar goes down, global liquidity, as measured in M2, goes up. But I don't think the US dollars should be looked at because it's fake, it's temporary. The ups and downs of the US dollar, to me, is not true liquidity. What true liquidity is when central banks money print. That's true liquidity. So if you look at this chart here, I'm going to expand a few. Oops, too much. If you look here on the right, liquidity is rising. Oops, I just lost it. Let me just go to the right here. Liquidity is rising at about 6.5% rate. My theory is that we do not get altcoin season until liquidity rises above 7%, like it did in 2021 and in 2018. So I want to go on to the next point because we have a lot to talk about. Okay, we talked about deregulation. We didn't talk about real world assets. So I want to talk about two things combined. I'm sorry, I'm talking your ear off. Waleed, do you have a question?
Yeah, I like your point about the Bitcoin halving cycle and altcoins not having a lot of steam. It's linked to liquidity, though. I just want to add a few more points, though. If you look at Bitcoin last year, even right now, most of the buying has been, or we could say the buying pressure has been your ETFs. You have Michael Saylor tweeting and buying stuff as well. So how do you have all that money that is going to Bitcoin? If you think of it like more of an on-ramp or access to the on-chain asset space, though, how is all that money then flowing into altcoins? If you look at previous cycles, someone who bought Bitcoin, got into the crypto sphere, made profit, then what did I go to find? I've made good amount of money. My bags are heavy. I probably sell some, maybe jump into some altcoin stuff. How do you see these ETFs jump into these altcoins? Doesn't seem to be a cross section there. Michael said is just going to buy and hold those. I don't see that happening. So I guess all that spill effect into altcoins, given who have been the bigger players buying Bitcoin recently last year, that whole dynamic has changed a lot though. So people are waiting for an all season, maybe all season, and also every time there's an all cycle, it's not the same as it's last year. It's not like completely identical though. It does rhyme, but not the complete one. So I'm very interested to see if you have any views of any views. Are there, like, how or if you'll see a proper true all cycle this time around though? I feel like dynamics have changed a lot though in the market. That's my
Yeah,
view.
Samuel Clemens, Mark Twain said, and I know everyone knows this, that history doesn't repeat itself, it rhymes, like you just said.
Exactly.
And I also believe that human nature, no matter what happens, human nature does not change. So, to answer your question, I am a firm believer that when liquidity comes, there is going to be an altcoin cycle. And let's say liquidity doesn't come, but Bitcoin doubles. I still think the wealth effect is going to cause an altcoin cycle because humans are humans. Humans do stupid things. We go on leverage and we get excited.
Yeah.
Even smart money like Microstrategy. Well, I'm not a big fan of Michael Saylor, but we could talk about that later. But even smart money,
We'll get there.
yeah, we're going to get there. Even smart money that buys Bitcoin, they're going to get greedy and they're going to buy altcoins. And speaking of crypto ETF flows, this is a weekly crypto asset flows. It's supposed to be coming out tomorrow. And I think we're going to see a big gain, not just in ETF flows for Bitcoin, but for Ethereum. So yes, I think that this time is different and that we got to step up and demand of Bitcoin because of not just ETFs, which was a while back now, but now we have a lot of treasuries that are buying Bitcoin. You could see here, it's not just MicroStrategy.
Yeah.
It's asset managers like Galaxy. It's Galaxy Digital. It's miners like Mara Holdings. But now increasingly, it's traditional corporations. There's small corporations like Semler Scientific. I think that's a corporation. So you got small ones down here that are buying Bitcoin. So that's going to cause a step up and the purchase of Bitcoin and buying and holding. So I think I agree with you what you said that it's a little different, but I still think that greed is greed. So let's go to the next point because we have a lot to talk about. Well, we already talked about Bitcoin fund flows. Now I know, Waleed, you want to talk about strategy, which is formerly known as MicroStrategy. And you want to know, or you mentioned that it might be a blessing and might be a curse. Could you talk a little about strategy?
Sure, sure. Actually, I was going to pose that question to you though, because I am
Awesome.
not too familiar with their thing. But as saying though, there is some theories out there it might be the next Luna, just because the way that they raise capital, have access to capital to getting more into Bitcoin. It seems a bit systematic risk, lack of a better term though. So they have these common stocks, now they have preferred stock asset, they're giving yields, stuff like that though. So maybe you can, using your TradeFi background, talk a bit more like, am I wrong here that people having a bit of a fright with the way they operate things and getting their hands on more Bitcoin, or do you think this is going to exponentially grow way better in the future though? Just hear your words as well.
I have a lot to say, so I'll just give a few points. I used to like write articles on shorting companies, and there were a few key factors I looked at for shorting companies. And even though I have like a background in financial analysis, for shorting companies, you have to use your right brain, or is it the left brain? You have to use a qualitative, holistic brain. And when I use that brain, that part of me for strategy slash MicroStrategy, and you can see I have a chart here. You can see how much they're buying of Bitcoin. It just keeps going up,
Yeah,
up, up. I
yeah,
am totally in the negative case for strategy. I am very suspicious of Michael Saylor for many reasons. We won't have time to explain it, but some of the reasons are he's like a religious cult leader, just pushing and pushing uh, Bitcoin. He wants everyone in the world to buy it, just like a cult leader. He's buying it for his company like crazy. Meanwhile, his company is not even doing too well. This is not like Berkshire Hathaway. This is a company that's not doing great. And he's using all his money and taking out debt to buy more Bitcoin. I don't like the way he's doing that because I do think, and you mentioned it, that it could be a curse because when times are good, it's like a leverage play
Yes.
on Bitcoin, and he has this fancy formula. And when you look at people that have committed fraud, or even if I'm not going to accuse them of fraud, but people that have done scandals, they just like him, they use fancy formulas. He has a very fancy formula showing that when his stock is overvalued and he issues overvalued stock to buy Bitcoin, it creates value. I just think this is a crazy leveraged way of buying Bitcoin. Listen, let me sum it up this way. If you like Bitcoin, buy Bitcoin. If you want to buy
Yeah.
Bitcoin leverage, go on leverage. If you want to have more leverage, buy altcoins. If you want more leverage and you want a proxy, buy Coinbase or buy some Bitcoin
Great point.
miners. So yeah, I could talk about this in another day, but I am totally against what
We
Michael.
should do a topic on this then. We should do like a separate topic on this whole thing, different
Yeah,
time.
it's a lot to talk. Did you want to say anything about it? Because I wasn't sure if you were
No, no,
interested.
that's fine. That was very nicely summarized. If you have more things to say, I would love to hear those things. We can probably do a separate topic on just
I think we need a
this
separate
thing.
podcast. And I didn't. Just
100%. Yeah.
if you look at my LinkedIn, I did a big post on MicroStrategy. I don't remember everything I wrote about, but I just remembered one thing as I was saying. I don't remember. He was committed a fraud after the tech wreck of 2000. Michael Saylor settled with the U.S. government for committing fraud. So he's already committed fraud once. So fool me once, but don't fool me twice. So
Okay.
yeah, I stay away from people like that. So now, Waleed, you want to talk about Ethereum, how we can increase adoption, things like that. And there's so much to talk about. There's a Pectra upgrade, there's staking, um, there's a change in leadership at the Ethereum Foundation. So I'm going to share my screen because I think you want to talk about that. So let me, or the screen's already shared. Let's talk about, let's
Yeah.
focus on Ethereum staking or whatnot. So talk to me about Ethereum. Do you like Ethereum?
Ooh, that's so okay. So I'm more of a neutral person when it comes to technology, though. And if you see the rate of how things change in this space, though, it's very fast. Ethereum, as long as or Solana, Ethereum, Avalanche, Cardano, take anyone though, they can change in a few months. So you can see like a change. For example, one blockchain is doing completely fine though, and then it breaks overnight. Sentiment changes though, people start rushing out of it though, things can collapse. You saw Luna disappear few days overnight, it's gone. So these are still like early projects, so a lot of tests though. I do respect the Ethereum space though. I come more from a Solana background though, been there in the space of a couple of years though. That's how I kind of got into crypto, working for a few decentralized applications in the space though. And that was my first way, that was my first gateway to crypto. It was faster and cheaper. So when I moved to Ethereum, things felt slower and more expensive. So I was like, okay, fine. This is the best blockchain that they have in the market. But anyways, keeping that part for now though. Staking. So we did have Ethereum ETF launch. I don't know exact date last year though. It was a big thing. But if you see the flows of it though, some months, some weeks have been amazing, some have been fine though. And
I mean,
what
cut you off for a second. I could show everyone the
yeah,
flows
let's can see
on
the
coin
flows. Yeah.
shares. If you look here, can you see here the flows year to date and weekly flows?
Yeah, year to date is that's very less, 551. Yeah, so I don't think this has been a very popular product, but when I think of the average, or not the average person, someone who you introduce to Bitcoin ETFs or Bitcoin, though, you can just say, hey, it's digital gold, it's hedged against inflation, store of value. A bit easier to maybe understand for someone from hedge funds, institutions. Maybe it's an easier or quicker
You're talking
sell,
about the
especially with
narrative. The narrative for
narrative. Exactly,
Bitcoin
exactly.
is so simple and easy to understand.
Exactly. Exactly. So if you take Ethereum and you take, okay, fine, it's programmable smart contracts, it's account based layer one, maybe you lose some people in that sense. And if you think of a protocol that does give you native yield, which Bitcoin doesn't do. There's no native yield. I mean, you can get yield two different ways, but there's no native because of proof of work, though. The Ethereum, you have yields, but when ETFs launch, the deal was that it will not have, staking enabled, though.
No,
Now
no
I think there's some
staking. It's
charts,
illegal.
no staking. Exactly. So I think I was reading some stuff that there was supposed to be a decision happening for staking by June 1st, which has been postponed till October
Yes.
of this year. So that was kind of like not a good news. I was, as an analyst, I was looking at this a few months ago. That hopefully by summer this thing is, more complete and we see a bit more inflow, a bit more adoption though. So at the moment we do have about 30% of all Ethereum that is staked, to secure the network though. Would this number go double if we do enable from this chart here though? If you give access to these ETFs having yield, like if you look at these institutions though, I'm sure they love when there's yield linked to your product though. So if you have those things enabled, can we see maybe 30% being 60%, something that Solana has at the moment though? Could it catch up to Solana staking? And it kind of has lost that race to how much of the circulating supply is in those figures though. So also would like to hear your views from a traditional finance background though. Do you think that is something, or it's a nothing burger? You think that change will not? Do you think there's some other issues when it comes to Ethereum as a product in the Wall Street side of things though,
Now,
that needs to be addressed?
I have a lot to say there, but I'm going to keep it simple. I think Ethereum speaks the language of traditional finance. So I agree with you 100%. I think, and I've been too aggressive. Like I recommend people put most of their money in Bitcoin and some in altcoins, but I've been very aggressive with altcoins. Why? Because altcoins speak the language of traditional finance, meaning what you just said. TradFi people love yield because they're just used to it. They're comfortable. And they're also very comfortable with Ethereum because some people say that Bitcoin has no intrinsic value, it's fake, things like that, Ponzi schemes. But Ethereum actually can help traditional finance companies with the mid office and back office operations, right? And we know about tokenization. So it could help them not just, so there's a lot to say here. It could help them in the back office and in the front office in terms of tokenizing assets, but also these traditional finance companies have asset manager arms. They have asset management, right? Those asset managers prefer, like you said, they prefer yield. So I agree with you 100%. I actually think that when the key word is when we get crypto deregulation in the United States, I think there's going to be a huge amount of flows going to Ethereum. And so I think number one, like you said, the staking yields is going to rise. And number two, you're going to see these ETF flows, which have been much smaller. You can see 149 million versus 1.8 billion for Bitcoin. You're going to see that change. You're going to see this 149 go up dramatically to $300 million a week, maybe even $500 million a week once we get crypto deregulation. And so there's a lot of things that are coming together at the same time. Crypto deregulation isn't just about staking. It's also about tokenization of assets. And this is real world assets. And real world assets, believe it or not, isn't just tokenizing real estate, but stablecoins, believe it or not, is considered tokenization of assets, but they don't call it that. They just call it tokenization. But think about it.
I think that was the first use case of the first time this category came to be. Stablecoins would probably be the OG, RWAs on the blockchain if you think about it.
Now look at the growth. Look at the growth of stablecoins. It's you can't. There it is. It's gone from nothing in 2020 to 232 billion dollars. A huge amount of money, and we don't even have legality yet. And look at the market overview for tokenization of assets, 22.5 billion, and that's excluding stablecoins. And look at the growth, and this is without the regulation. So we have a lot going on here. So we're running out of time. So I just wanted to talk about one or two other things here. In the news, we've got Coinbase buying Deribit, and we've got Ripple, which is a corporation, for-profit corporation, buying or bidding for $5 billion for Circle. Which, speaking of Circle, stablecoin, Circle issues the centralized USDC coin. Most of it is supported by Coinbase, by the way. And lastly, but not least, because we only have 2 minutes left, I said in the beginning that we would talk about how Warren Buffett and Berkshire Hathaway and Apple is related to crypto. So maybe, Waleed, do you remember? I think, because you sent me that text about it. How is Apple related to crypto?
So I think Apple has now enabled these crypto applications to be accessible on its marketplace. I think that's one update. I think you can also pay in crypto on these applications, on these apps. And I think the tax component, I think there's a 30% tax on these applications. I think those are two things that they have made or will be made soon. So that's a big win for crypto in general, though, as well.
Yeah, I think it's a big win it's a win-win for crypto and for Apple. Apple's being sued. The U.S. government has a 5-year suit, and they want Apple to open up the Apple Store so there's no 30% fee. And so they're giving the government some excuse saying, hey, look, crypto is free. You don't have to pay the 30% tax. And the reason I brought Warren Buffett and Apple is because last year he started to heavily sell his number one holding, which is Apple. He's selling it aggressively, and I think he's worried about multiple factors, including this lawsuit with the Apple Store, and now he's worried about tariffs because it's going to be very expensive to build Apples in the United States. So they're trying to move Apples from being built from China to India, but there's going to be a lot of execution risk. There's a lot of risk with Apple. What else? Do you want to talk about anything before we go? Did I forget anything? Because there's a huge list here, folks.
Yeah, no. I think this was nice little topics were touched upon, and I think we briefly talked on many things. So yeah, it was a nice chit chat, though. I think I have nothing else to say from my side at the moment.
Okay, I screwed up a little, folks. I messed up the timing here. I've got so much to talk about, but we can continue this next week. And I'm going to talk a little more about Ethereum and what's going on with Solana, because I know my friend here is a big fan of Solana, so we could talk about it. I'm actually a big fan of Solana too, and I really like Tolly. I just saw he had an interview on, I think it was yesterday, and it was really good. So thanks, folks, for listening, and thanks for joining me, Waleed, on this podcast. And let's see if we can continue this and keep the momentum going. Take care, folks, and bye-bye.
Thank you, Dominic, for having me on your podcast. Have a good day.
Take care. Bye-bye.